Okay, everyone here at the Investing Stuff We Should Know podcast. We have another cool guest with us today. As you know, lately we've been bringing on some pretty exciting guests. We've had people talking about, the kind of tokenization at a global scale, tokenizing gold. Now we have another amazing guest, and this is something I've been actually interested in myself, is the tokenization of real estate. And a lot of people are talking about it. A lot of people are doing it. But we have an expert with us today, Jared Lutz. So, Jared, thank you for joining us today, and I'm really excited for you to explain to us novices what the buzz is about in this space.
No, thank you for having me. In that intro, you said something that was kind of interesting to me, that you've had people talking about tokenizing commodities or gold or anything else, and I'm very curious on my take versus theirs, because it's really the same thing. Like tokenizing gold or any other commodity or really any asset, they're going to be different processes in on the accreditation levels or the type of fund it might be, but the actual tokenization process should be the same, right? Like, we're not taking gold and fractionalizing it. It's really, you would have some sort of SPV or company that owns said gold, and that is what's tokenized, is the ownership inside of the company that owns the asset.
For sure, man. And that piece is obviously with the collapse of FTX.
Oh, that's a
And
great conversation.
yeah, with all that ringing in our ears, if anyone's been paying attention to the news, people are nervous or they're uncertain. They know, I guess it's one of those things, kind of this is almost like the crock pot of our brain. When as soon as we hear something with crypto, whether it's Ethereum or blockchain or a Bitcoin or whatever, we have like this, oh yeah, the guys are doing some shady thing or some shaky thing, and they don't really know what's going on. So
immediately it's a scam.
Yeah, we're going to address that in a minute here, but give the audience a little bit of what you've done. I think you've done some pretty cool. You've just founded or been part of some really interesting companies, and then your own kind of just professional background, just so we know, what makes you an authority to speak in this space, or your expertise.
Yeah, definitely. So, I've always been an entrepreneur since 2008, and the company I had the longest was an advertising or marketing company, marketing advertising, which ended up really just being a software development company, because we'd have clients that would come to us and say, "Hey, this is our idea. This is how much capital we have. And do you know developers?" Right? Because and in marketing, we do a lot of web development, so it really ended up just our core competency very quickly in that company went to software development for marketing purposes. But in that process, we focused on legal and medical. And
Oh,
so
okay, yeah.
yeah. So I like focusing on core competencies in little niche markets, which is why we went after real estate for this one. But those are two very complex, very regulated environments with very strict protocols on how you have to manage data, who has access to it, the background that has to be background checks that have to be done on participants of the system that have access to certain parts of data. And I thought patient information, which is HIPAA compliance, I thought that was like the hardest thing. And with how we manage the data. And then I got into securities, and I was like, wow, this is beyond difficult, because and I actually like very difficult environments, because it creates a very strict framework for like how we're supposed to develop the code.
Yes.
But having that background, and then in legal, our largest client was an asset protection company. And so I got very familiar with APIing into different states and structuring assets in a very specific way. And this was an internal software.
What does API mean? What is APIing? What does that mean?
It's an application program interface. So it's for us to be able to share information with one another through various endpoints. So this is where we can essentially talk to each other. So on our software, so the software that I'll get into in a sec, this has multiple integrations that are all powered by various APIs. So this would be like Circle integration, which is USDC or Coinbase, or with the various different financial institutions for transferring money. We're talking about banks or brokerage firms. We partnered with legal or subsidiary of LegalZoom, and sorry, my phone. And so we can actually create companies you could do this on our software. You could
And
work with all these.
Just for clarity, Jared. So this is the company you're working on now, the tokenized real estate.
Yeah.
Okay,
Sorry, I
so
kind of diverted there.
we jumped a little bit there. I didn't follow that.
So
But anyway,
you asked me an API question. I went so far.
We diverted, like boom, door. We both ran through here.
It's a way for us to work with multiple people without having the user having to like work with like 4 or 5 different applications.
Yeah, which obviously it sucks. I mean, if you start spend any time on marketing or your customer relationship management software or anything like that, pretty soon it's all about this system talking to that system. Well, 5, 6, 7, 8 different systems. You need all those guys, all those different interfaces that are different platforms to talk to each other smoothly and efficiently. So you're not having to manually move things around and whatnot. Exactly. So I see here. So what's the name of your current company?
Yeah, it's DCAP, which it stands for Decentralized Capital Allocation Protocol.
Okay.
And then under DCAP is DCAP Digital Assets, which is what we're talking about now, which is the software. So,
what's Starship? What'd you do at Starship? What was that?
I'll get into that. Okay. So I had this marketing company, right? And then COVID hit, and like a lot of people, like we lost a significant, because the marketing budget's always like one of the first ones to go. Yeah. And so we lost a significant portion of our income. And it's not that we lost the clients, we just like lost those retainers. And so I was fortunate that I didn't need, to go out and find a job right away. Not like you really could. And so I started a charity and just started like over the last 10 years of running this marketing company, I'd acquired so much technology and subscriptions, and I had all these resources and a ton of time on my hands. So I started the charity, and I basically just worked for free, helping small businesses build up their websites, do their SEO, have access to some of these subscriptions that I'd already like paid for. And then after about a year or so, I had to start making money, right? And
so it tends to happen.
Yeah. Because I didn't like, even though I started the charity, I never solicited for donations. I partnered with Google and I partnered with Microsoft, and I was able to get resources from them and deliver it to small business.
Oh, that's amazing. That's amazing. Obviously, charity, by the way, such a niche market, but also it's like so needed, where like everyone like was at the home, and if you could start a business, like the most natural one was something online. So there's a lot of digital infrastructure there that needs to be set up that most have no idea how to do, or a very vague idea how to do. Mm-hmm. So that's a real need, a real demand out there.
It was great for me too, because like it'd been a while, in the marketing company, I had 25 developers. And so like, it was very rare for me to get involved on that level. And whereas with the charity, I didn't have anyone, it was just myself. And so it was cool to get back to the roots of like building this stuff on my own. So that was a really cool experience. So I need to start making money. I live in San Diego. It's super expensive here. And, so I started trading crypto more aggressively. Like I'd already been invested in it, but I started doing what everyone else did at that time period and started trading crypto. And about 25 or 30 people that I kind of met on Reddit, which is this crazy crypto environment for a social network, we got together and we just started like trading together, right? Like making trading decisions together. A lot of this was kind of fueled by what we saw with AMC and GameStop and that kind of stuff, where you saw investors group together to move the price. And then we started Starship, which is what you asked the question of. And Starship is a metaverse, and it's in the GameFi, and they have many different products. And it was just really kind of doing what everyone else was that was a developer in crypto at that time doing, which is starting your own token and illegally operating securities, because that's pretty much what they are. Yes. But I didn't know at this time, right? So around month 4 or so, we start realizing that.
So this was this like I don't know, September of 2020, or what? Give us a time frame here.
So this is 2021.
2020. So okay, sorry. Go ahead.
Yeah. So this be around September of 2021. I began realizing, like, as I'm reviewing the different laws and regulations around securities, that we need to restructure the entire way that we had created this company. At this point, we had probably 10 or 11,000 investors in this company.
Wow.
It went from 0 to 100 million from May to November 2nd or 3rd or something
So
like
were
that.
you running it? Were you like essentially the GP on that, or was like
I
a
was the
large collective of
the
people
C,
managing it?
I was the CTO of the company. So I
Okay.
was in charge of all the technology, the token, the smart contracts, and it just became a very uncomfortable thing. And my whole thing was, I wanted to, we were in this very unknown space where, like, there was a lot of ambiguity. There was no real guidance on how we should be operating. I don't even mean within securities. I just within the technology. And it felt very uncomfortable for me. And I was really focused on how can we take blockchain, because I'd already been looking into blockchain from a development standpoint with asset protection in 2017 and 2018. And
When you say asset protection, do you have anything in particular in mind there, Jared? Like houses or cars or machinery, or just like the
everything.
broadest sense of what of an asset?
Yeah, so it was an internal software that we built for a client, that it was a law firm. And what it would do is the client would fill out a form, and it would list all of their assets. And so then what the system will do is it will start creating entities within states where those assets are being held. And then usually it's in Wyoming, it'll create a holding company that will be the sole managing partner of all these various LLCs that are created within the states that those assets reside in or live in.
Yeah. Mm-hmm.
And so the software would just facilitate that whole process, and file those companies with the states and all that kind of good stuff. It
Okay,
was
so
really just
automated system of, kind of like you said, of the asset protection from a legal perspective, within states and the federal system, how to, make sure that was streamlining the process, which is obviously very tedious.
yeah. I think I'd have to double check with them, but I think our software reduced like 30% of their time for their employees. So we probably got people fired, but it's good.
You
You want to
allow them to
operate
do
it.
other productive things. You
Yes, that's
loosen up.
exactly.
You liberated cognitive capacity for other things.
Exactly. That's exactly what that did. So when I say asset protection, that's what I mean. And
Yeah.
that actually plays a lot in real estate. But
Yeah,
with
that's an awesome segue, man, into Decap, which is the company. So did you more or less found that in beginning of 2022?
Yeah, so it kind of started December 2021, but I was pushing really hard to get out of metaverse, to get out of GameFi when I was still in the crypto space. And it was this, this clash with the CEO of my partner at the time. He
So
was in a different.
did he believe in it? Did he believe it's like this is the way of the future? Keep, metaverse, game life, all that stuff. You wanted to continue in that, or what was the
Oh,
step?
they still do. They still run it. Yeah, they're
Okay,
still very
so
active, right?
and then
And so,
you just didn't see the vision, or you just didn't have the passion for it. Why did you want? Why did you
oh,
run them out?
I didn't see the vision at all. Like, there was no aspect of what we were doing, and to be honest with you, what we were doing was being pushed on us by our investors, right? Like when we first started we probably had 3 or 4 thousand investors, although you wouldn't call them investors, token holders, that uh, that were in our company, were like in the token before we even had a product. So the first product that we built and launched in end of August or September was was a web app that is in not a web app, an actual app for iOS and for Android for trading. And we were around for like 3 or 4 months before that even happened. And then all of a sudden we jumped up to like 15,000 investors. And I still don't really believe in the metaverse. I think it does have, I think it does have a place in the future for very specific things. But what we
Yes.
saw happen with it last year, I don't see it. I didn't see GameFi. There's a lot of clash between the gaming community and the crypto community. And it just wasn't what I was doing. I was coming from a charity where I was helping businesses. So like I really wanted to take what I knew about technology and blockchain and use it for something that we could deploy for a real world application, like
Yeah.
right away.
Yeah. No,
And
I love that. I love that genesis there, Jared. So it's
yeah,
like all this, and I think a lot of, especially older folks, have trouble even conceptualizing what all of this, like it's a lot of just like, tech bros and crypto heads just doing this
yeah,
stuff. And it's interesting and there is value, but also if your heart is in kind of the real world, it's like, this is not going to like necessarily put food on the table or feed or house a family, which, that's where things get more real. So, we're kind of, we're speaking from the same, reading from the same page there. So you had this passion to then step into the real estate and then basically tokenize real estate. So
yeah.
break
Which
that. Go
I
ahead.
already wanted to do before, right? So
Awesome. So you already, the
I
passion was already there. So it wasn't just like it just
yeah,
blossomed forward. Okay. Gotcha. Yeah.
yeah, because I had been trying to push this narrative within the crypto company Starship for like from its inception, and it was basically me battling all of these crypto degen traders. I don't really want to call them degens, but these crypto traders who want metaverse and want gamified like play to earn games. That's not me. I can't play a video game for more than 45 minutes. I get bored.
Right. Right.
And but I had bought the domain REIT Moon, which I'll never use, but I bought that in May of 2021. So like right away, real estate was what I wanted to get into. And when I finally resigned and made that sever, it was a very quick process. One of my best friends, he's the president of our real estate side in DCAP. He's been a property controller for 10 years and has controlled at any given time 1,000 to 2,000 different properties. And so he knew, he not knew, he knows a significant amount of the operational side of managing a property, which I need to code, right? So I need all of that information to code. And I like I said at the beginning of this, I like regulatory environments because it provides that framework for me to build an application within.
And
And
as engineers, that's like the
yeah,
first thing you want to know. It's like, okay, what are the constraints? What are the
yeah,
constraints? What are the design parameters? What are the requirements? You go through this list because like you can't build something that it isn't defined. So even that's a strange thing to say. It's like, don't you want to be creative? Like there's plenty of room for creativity when there's unconstrained design space is a disaster. Like the human mind can't really build in the infinite, unless you're just an artist who just makes stuff up, because it has to interface with a lot of different things. So you actually have superimposed constraints. It's literally easier to build in many cases, not always, but in many cases, to start building from a framework, a system, versus just doing anything you want to.
100%, absolutely. And so we wanted to focus on an asset that could actually, and we moved away from this, but our original conception was to focus on an asset class like real estate that cash flows, where the cash flow would provide liquidity for the token to trade on.
Okay.
And
let's stop there. So let's just say half the people here in the audience, they kind of have an inkling, but they're not really sure about it. So take us not in the nauseating depth, but like kind of like high level, like step by step.
I don't know how to. I can't go. It's either nauseating or it's not.
We'll hover between there. We'll try to do that. So,
I'll try to explain it like I explained it to my wife.
Is it easier to, let's just take how about everyone, like there's most people have owned a home or lived in a home. So let's take a single family home. How would you take that home, make a price up, it's $100,000, $200,000 home in Iowa or somewhere Midwest USA? How would you tokenize that, and what does that mean?
Yeah, so because what I was just saying about like the token trading and having liquidity, that doesn't really play to this specific answer or question. But to tokenize it, you would create some sort of special purpose vehicle, SPV, and you would establish your fund, and you would be structured under, most likely it's going to be Reg D, 506B or 506C, could be Reg A plus.
So security, we're going to create
it's a security,
a recognized security per the government. So that so we don't get lost in that. So we created a security, like you said. And then again, then what's the bridge between we have the asset called the home, or it could be a multifamily or a single family home.
Doesn't
We have
matter
the
what it is.
token. Yep. And then we have the asset, like awesome. And then we have the security, and then we're interfacing with blockchain.
Yeah. So the best way, most simple way I like to explain it is there is very little difference between how securities are managed right now and how securities are going to be managed on the blockchain. The difference is that your securities and all your information regarding those securities and the companies involved and the properties involved is on some sort of centralized database, probably on Amazon or AWS or on Azure, which is Microsoft.
Yes.
And those are databases that manage your information. And that is exactly what blockchain does. So there quite literally is no difference in the concept of the fact that we're storing information and accessing that information between a centralized server and a distributed ledger, which is blockchain. The difference between them, as far as processing, the fact that that we're managing data from a technical standpoint, one is centralized, meaning that they control all the information, they can manipulate it, they can change it, whatever is in that centralized environment, versus a distributed ledger or blockchain, which is where it's an immutable record. And so you can see all changes or of ownership or changes of token. Like you can see every aspect of what's happening in the database. You can't read it in the sense that on blockchain, here, for instance, on a centralized database, you wouldn't be able to see how many investors are on a deal. You wouldn't be able to see what company owns that property. On blockchain, you will see that if you provided some sort of front end interface, but you would be able to see that this token was created. It has X amount of investors. They invested this much money, and then the distributions, if they go into the same wallets, you would be able to see how all the money was just distributed, but you wouldn't be able to see identity. You would only be able to see wallet addresses. You would have to either have some sort of front end interface that translates that information, or you'd have to have access to all the wallets, like who owns each individual wallet. But the fact that you can just see that data.
Yeah. So we got radical, in a sense, kind of radical transparency. So that's appealing in some senses, right? And we want, like you said, a distributed source of truth. It's basically, it's like trustless. So we're all checking in each other. So I'm not going to do some shady thing back here and then coming up in front and telling Jared that I did this and I didn't actually do it, or I didn't put that much money, or I'm part of a larger group or whatever. All kinds of stuff going on. So everyone can see this, what's happening. Like you said, your identities to at least most the non-hacker types are not visible. And then of course it's appealing from just a functional perspective, PDFs and docs and data rooms and records and all this kind of stuff. Having a central source of truth, that's amazing too. But then also, so I guess then what if I didn't really like to see or show all that? I guess what's the answer to that? So why would I want this radical transparency? Or what, I guess, talk about the downsides.
Why you wouldn't want it? To be frank, it doesn't really matter what you want. It's moving to blockchain. Larry Fink is putting billions of dollars, the largest cut. Seriously, I'm serious. This isn't a question of speculation of whether or not blockchain is going to be the future.
Yes,
I'm 100% positive. Just seeing what all the big companies are doing. JP Morgan.
Yeah.
Jamie Dimon's my favorite. He's the CEO of JP, because he'll go out in the same interview and he'll say crypto is pet rocks, and if you invest in crypto, you're an idiot. But blockchain is the future. And people who don't know the difference between people think blockchain and crypto are the same thing. They're totally confused. And now I love it because now this is framing this whole narrative. Everything that happened with FTX was great for us because it's pushing it to the front. It's pushing regulation to the front, and that's what we want. But when you see the largest companies, the largest banks, the largest asset managers in the world, all investing billions of dollars into building their own blockchain infrastructures,
it's
not going any other way. It doesn't matter if Coinbase fails and FTX fails and Binance fails, because those are all crypto, the technology, blockchain, is the future. And our leaders are telling us that. So yeah, okay. So it doesn't really matter what you think. You're going to be interfacing with blockchain. But the why you do want it is a huge reason. What everyone will tell you is liquidity, which is not very true. But automation of administrative tasks are significantly streamlined. Due diligence is significantly streamlined. Funding significantly streamlined. It's just like, I could keep saying that over and over, significantly streamlined.
Yeah.
What
do you think?
Right now,
what's the drag? I would consider like the drag or the load on a normal transaction, Jared. If you've ever looked at that, what is that? If you take that away,
for a real estate transaction?
Sure. Yeah.
Are we talking about because that's going to depend on who's transferring the money and the title and all that. Are we talking about property or just
again?
funding?
Yeah, our hypothetical. I know you said it didn't really apply, but if you could just play with me. So like we're going to buy a house, title company, we have the agents on each side, we have the banks. Have all the different ancillary groups that are assisting to purchase that house. That adds a certain amount of time and cost, the percentage of cost, like 5% or something like that. If you took away all that, like you said, significant improvement of admin, funding and whatnot, and due diligence, if you took that away or made it hyper efficient, what kind of savings would that translate into on a real estate deal, if that's ever been proposed or you've thought about that?
Oh, sure, I've thought about it. If you take out the time, if you just take in processing, it's pretty immediate. So the negotiation part of it, in the due diligence on the property, well, if the property records are also on chain, if everything is on chain, it's how long is it going to take you to make a decision? Because the moment you sign that contract and press play to send money, you're going to get that asset within, it depends on what chain, but within 10 seconds.
Sure.
Like you'll have full ownership of that asset, assuming all the contracts are already done. Right. Because like there's a lot of still third party stuff, regardless of blockchain, negotiating the deal, like having lawyers involved. If it's like, commercial property, those are things that that will take up that time. But if we're just talking about processing, yes, it's same day. And whereas now it could take 45 days. You could go down to you could own your home, go down to the county records, in like all the time this happens, like your name is spelled incorrectly, or like there's some like
the abstract is jacked up, and it's like, this is not right.
It could take you 2 weeks to get that fixed, Right. So if everything's on chain, it's how fast do you want to go? Because it's gonna settle really quick.
The time constraint is it would no longer be on the normal trust mechanism the society is set up. It really just be down to kind of the personal level, really in your hand, like you said, like you said, 10 seconds, which is faster than most people can make any large decision. But then of course, then there's all this technology will have to catch up. So like, yes, your abstracts, your local county level are not going to be on blockchain. There's going to be thousands and thousands of counties to catch up and then do that. Just like the internet made it to these little podunk communities and counties, small counties, late and long. It's going to be the same thing with this blockchain. So that will be, but at least whatever fraction or percentage of the deal is within the blockchain, that will be, more or less from a human perspective, more or less instant.
Yeah. When the US moves onto a CBDC, that is going to start streamlining that process like pretty significantly.
Can you remind the folks again what CBDC is?
So a CBDC is a central bank digital currency, and it's essentially just, honestly, there's very little difference between like a digital dollar now and how we spend it versus how you will on blockchain later. What is different is the control that somebody has, and I know you just did this on a previous show, so I won't go into that, but it's just essentially our treasury operating our currency digitally.
Yeah.
which again, it largely does right now.
Yeah,
So
that's true. It's like there's a lot of transparency, a lot of control, and there's many layers that are already controlled. So I mean, like people are like, oh, reacting as if there's nothing now, and like that's not accurate. Like you think, rationally or logically about this, there's a lot there. There's a lot of this infrastructure or versions of it sitting there now.
it's just
But
semantics, really.
yeah, a lot of it.
Yeah.
You mentioned here on your your LinkedIn here, Jared, about the U.S. government aggressively positioning themselves to be the leader and influencer in the cryptocurrency financial markets.
Did I say that? Sounds right.
Yeah, you did. Reading it off your website here. Why is that good or bad? And what are they? Why are they doing that? And where do you think they're going with that? And is that more so than England and Finland and China and Thailand? I mean, just picking some countries here.
Yeah, well, so look, like what gives the US significant power right now with the US dollar is that the majority of the world trades on the US dollar. And I'm sort of speaking outside of my expertise, so if I'm wrong, somebody correct me. But the fact that a significant portion of the world's goods and services are traded in the US dollar gives the US dollar power.
Yes.
With technology growth, especially on the energy side, which is a lot of where that comes from when we're talking about oil. When we're starting to see that even just on the energy side with getting fusion ignition, which is like, I literally got chills just talking about it, because it's really the craziest thing I think I'll ever see in my lifetime is fusion. The fact that we were able to get that ignition tells us that we're likely to commercialize fusion within the next 2 or 3 decades.
Right.
And this is now turning our world into like an electronic world, really. And so I feel like I'm really going off the path there, but basically like controlling like the moment that technology takes over and we start using way less oil, that's going to change a lot of our global trade.
Oh,
And
that's an awesome point to make there. So when energy becomes,
which will impact the dollar.
Yeah, a few thought leaders out there position this and like, I don't think it's going to be. I mean, we have in our modern society. Let me make this statement: we have not really a problem of lack as really a problem in often cases of surplus, of excess. Too much eating, too much something like there's too much of everything. A lot of stuff, that for sure. Yeah. In a lot of cases. Yeah. And so then with this fusion, essentially we're going to have energy will no longer be a constraint as well. We will no longer have a lack of reliable, cheap, clean energy, more or less, is what this proposition is going with. So then that link between is super important between when that fundamentally changes, let's just say fusion actually becomes commercially viable, then that's obviously going to drop, impact oil, which then, really has propped the dollar for many decades. And we're going to see a fundamental realignment of the world's currency and the world's power structure.
Yeah. Okay. Yeah. So I'm glad that you agree with that, because I really didn't know if I was being accurate there, because I'm like kind of speaking out of my core competency, but I love tech. So like I read it all. Yeah. And it's fascinating stuff, like the fusion ignition.
Why would here's a question that lingers in my mind often, Jared, as you see all these different companies like Decap and others. I'm not an expert, so I don't know them off the top of my head, but there are a lot of people are getting into the space. I find it like confusing. Like, how would I? So is it like Decap trying to like lead out with like the leading technology, and like somebody else is going to try to like supplant you or upstage you, or how do you guys all play nice when you just try to grow into the marketplace, which is kind of the Wild West now? How does that all work together? Just simply just like what's a good analogy? I guess maybe that's the question.
Well, this is a great conversation into the great segue into liquidity. So, and this is where I get real outside of my comfort zone, because I'm an introvert and I like being in the back office. I'm comfortable with like, in my where I just like can build on my own.
Yeah.
If I weren't such an early adopter and creator of this technology, I most likely would just be trying to have like a boutique type service, right? Where we operate funds and we use the technology to do it, and it's just all vertical, right? But because I am here at this point, and I really had my older brother, who's like a very big tech guy. Um, he uh he was he really gave me the confidence and basically said, you're in a position that very few people are in, where you're knowledgeable, you can build it on your own, and it won't take you any money to do it. And so I sort of just took that and ran with it, and we built this up. And so the only reason why I'm pushing this to be a globally competitive product is because the opportunity exists. If I came 2-3 years later, I still would build it, but it would be more like boutique, and I would have closer relationships with our investors and stuff like that.
Is a halfway decent analogy like the beginning of the internet? So it's not the internet, but like, whether it was, Yahoo or Bing or Google, are you trying to be like the Google and like be kind of like the provider in the space? Is that a good analogy, or is that a weak analogy?
No, that's great. I'm not trying to do that though. That's my exit strategy. I am trying to build the tech to a certain level to where it can be consumed by Fidelity or BlackRock, somebody who can take the technology and can really bring it to more mass adoption. There is really, I don't really believe, because of how tight knit the the asset management community is, I really find it hard to believe that there's going to be a startup that amasses to that level. It's absolutely possible, but when you have
Extremely
companies
rare.
when you have
That kind
companies
of,
like
yeah.
BlackRock that own close to 11 trillion in assets, or they manage 11 trillion or 10, a little over 10, you're not going to compete with them. That's very difficult.
Absolutely, man.
Yeah.
So we talked about high level and where the company's going, a lot of amazing things here. Get a little bit where you actually want people to use your service or use your company, Jared. What does that look like? So now we're talking. So like, if I wanted to use your service, how would we engage?
Yeah. So, I mean, you would reach out to us right now. We're in the MVP phase, which is where we're building our beta group.
And that's minimum viable product. Is that what that
yeah.
acronym stands for? Yeah.
Yeah. Which is that it has the most basic components it needs to achieve its job, right? So for us, the most basic components is fund the deal, manage the cap table, right? And do your distributions. That's basically the most fundamental part of it. From that point on, it's really looking at where do we want to, or what's the UI UX? Okay, so what does it look like, it feel like, and how do I get through it? Yeah, the software I'm talking about.
Is there a like a percentage or a fixed cost there to use that, or are you just kind of working with select partners as they engage and you're both getting some value out of it? What does that look like?
The beta is free for people who participate in it. So we're looking at 10 to 20 funds, could be close to 100 mil or more in assets tokenized to be on platform. And to be honest, I don't really care if the assets are tokenized or not. We recognize that this is going to be a learning curve, and so we operate a dual custodian, and so you can do partial tokenization if your fund, because funds have 100 papers of like pages of disclaimers and all this other stuff before they purchase the property. If they didn't list tokenization in there, that's going to be an issue, and there will be some sort of level of recourse or some sort of level where the investors, the LPs, can say, you didn't disclose this before, we don't want to tokenize it, we don't want anything to do with blockchain. So what we did was,
help me out there just real quick, Jared. Where does that language live? So like you said, this any assets in the fund may be tokenized. Like, where does that live in the kind of the framework of your normal PPM? I know we're getting a little bit deep there.
It's a PPM is where it lives, and it's people structure PPMs like totally different, but it's going to be in a disclosure section.
Disclosure.
So it should be there. And so where really they just need to say now, I think you'll see it a lot more now. And this is a great question from Mauricio, who has the real estate syndication group on Facebook, is putting that language in your PPMs now because you may not be able to move on to blockchain in the future unless you use a company like mine, unless you have the language there. So what I mean by operating dual custodians is that we can take one fund and tokenize half of it and not tokenize the other half. So you can choose if you want, like investors can choose if they want their ownership to be, because again, we're just talking about databasing. So when I say we're two different custodians, it's really just saying that that information is held in two different databases.
Yeah.
And so you can choose which route you want to go, which plays huge in 1031s, because, and you could flip back too. Like, so you could flip over to a digital and then you could flip back over to traditional. Why I say it plays as huge in 1031s is, and these are like kind exchanges with the IRS.
Yes.
Is that right now the IRS says that a digital asset, which is any digital asset on blockchain, anytime you sell it, it's a taxable event. So that essentially takes 1031 off blockchain completely. Like you can't do a 1031 on blockchain because it'll, according to the current language of the IRS, that's a taxable event. So you could operate on chain, and then if you're in a tick or tenants in common or like whatever would facilitate the ability to do a 1031, you could then swap it back to a traditional and then do your, because the sale would be registered on the centralized database.
Right.
It wouldn't be registered on the, well, we still mirror it, right? We still mirror the transaction, even though it's on centralized. So it still shows up on blockchain, but that's not the official custodian record.
Wow. All that makes sense, but it's also
very complicated.
Like, it's complicated. It's like you have to
Yeah.
whiteboard that out. So we'll call that a wrap, Jared. This has been a fantastic interview.
Yeah.
Thank you for, like you said at the beginning, maybe pre-show, we'll have to have multiple sessions here to really drill into this
series.
8-part series. Really get into this and lay it out. So thank you for being a part of this, for sharing your knowledge. This has been amazing. And like you said, you mentioned the company already, but Decap, where do you spread the good word? Is Twitter? Is it LinkedIn? Is it Facebook? And also, like, where do people find out and also work with you? What are those? Give us the goods there.
Yeah, so I would just go to decapdigitalassets.com. You can find us on YouTube. Our handle is at asset tokenization. So if you just go to youtube.com/at asset tokenization, that'll go to our YouTube. And then on our YouTube, we also have a Discord. If you go to our site, you can see all this information. We also have another site, decap.finance. But if you're interested in the platform, it's decapdigitalassets.com. Yeah, reach out to me. Like I said, first 10, 20 funds or so, they're going to be in beta. It's going to be completely for free. So but I if you are a person that wants to be part of that, I am requiring that there be some sort of activity there. Like the reason why you're part of beta is to tell me that you want the flow of information to go a certain way, that you want certain data to be visualized a certain way or to be in a table, right? So that's a lot of the information that we're really trying to get from these first 10, 20, so we can build out that very specific UX, UI, user experience, user interface, before we open it up to the public.
Awesome, man. Well, amazing. All right. Well, that's a wrap, folks. Well, thank you for listening to another, I think, an amazing guest. I'll just say that amazing guest, an amazing episode of investing stuff you should know. And this stuff really is stuff that you should know. So if you like these kinds of guests and these episodes, give us a like, give us a review, of course, which is always appreciated. Spread the word. We can keep bringing on the amazing guests like Jared and others to the show. So until that time, thank you, Jared, and signing off here.
Thank you.